Welcome to Samba Samba. Enjoy the video.
In this video, I will explain how to use Binance Margin Trade. Margin trading allows you to amplify your potential returns by borrowing funds. It's a powerful tool, but it also comes with increased risk. We'll cover the basics of getting started and understanding the core concepts on Binance, ensuring you approach it with confidence and a clear strategy. First, you'll need to enable margin trading in your Binance account settings. Once activated, transfer the assets you wish to use as collateral from your spot wallet to your margin wallet. You'll then decide whether to use isolated margin, which limits risk to a single trading pair, or cross margin, which uses all assets in your margin wallet as collateral. Now, to place a trade, you can borrow funds either automatically or manually. Binance allows you to select your desired leverage, perhaps 3 times or 5 times, depending on the trading pair. After borrowing, simply place your buy or sell order as you normally would, but now you're trading with a larger position size thanks to the borrowed assets. Managing your open positions is crucial. Always monitor your margin level to understand your risk of liquidation. When you're ready, repay the borrowed funds and any accrued interest to close your position. If the market moves against you, consider adding more collateral to your margin wallet to prevent a margin call and potential automatic liquidation of your assets.
Thanks for watching. Consider subscribing if we helped you.